Crypto crisis is what I titled this video. All right. I call it crisis for a reason. Okay. Crypto crisis. Crypto can make you a whole lot of money. Okay. But it can also make you cry. If you look at the spelling of crypto, now look at it very well. Crypto. The first three alphabets, if you take them alone, you will see it is cry. So it can potentially make you cry. It can make you a whole lot of money too, all right? But it can also make you cry. It's a double-edged sword, all right? Now, there's lots of robots that I've tried in the past, cryptocurrency trading robots, especially those that trade futures, because futures trading is the one that can make you quick money very fast. You know, we all love to make money very fast. So I've tested a lot of cryptocurrency trading robots, and I know the complications that comes with them. Okay, so in this video, I'm going to tell you the complications that comes with cryptocurrency trading, especially futures trading. And at the end of the video, I'm going to tell you what I am trying out. And I'm also going to invite you to come and try it out with me. Okay, what I'm trying out is going to be as a result of the analysis I'm going to make now, so that I can convince you to come and test it out with me as well. And at the end of the day, we are going to share results to know how far it has worked for us. Okay, now let's talk about the complications that comes with crypto trading. Then gradually, with the complications, together we will try to bring a solution, and the solution will be at the end of the video and also in the description of this video. But before you go there, let us make it make sense why people cannot consistently make money from crypto and what we can do together to make it better. Now, I've tested out a whole lot of robots. I've made a whole lot of mistakes. Like I always say, I am not a guru. I'm just a random guy on YouTube. I don't give investment advice. This channel only helps me to detail my journey towards financial freedom and hopefully bring you along with me in that journey. Now, complication number one. When you are trading crypto, all right, majority of the settings, default settings on your exchange puts your trade on a cross. We have cross trades and we also have what they call isolated. All right. Most people trade cross. All right. And that is one of the major things that puts your account at the risk of liquidation. Now, let me explain cross trade to you real quickly in a way the average human being is going to understand. Let's say my entire portfolio capital is $100. Okay, is what I have to trade. Now I'm trading two crypto pairs. All right, let's say I'm trading Cardano, that is ADA USDT. Okay, is what I'm trading. And I'm also trading Ripple XRP USDT pair is what I'm trading. Futures trading, mind you. And maybe for my robot settings or my manual settings, I'm allocating $20 each to each trade. $20 from my capital of $100. That means $40 is in the market. What is now going to be reflecting as my balance is going to be what? $60 as my total balance here in that particular portfolio. Now, it doesn't matter what I'm predicting for Cardano and XRP, either long, going up, or short, it doesn't matter. Now, if markets were to move against my prediction for ADA USDT, okay, this is a cross trade I'm showing you. This money will wipe out. If it were to move against me for XRP2, this money will also wipe out. Account will go to $0. Cross means when money finishes for individual position, cross over to the balance to take more money. The exact same amount of money I asked you to trade, market moved against you, exhausted that money, go to my available balance, cross over to my available balance, take that same amount of money and continue the trade. That's what cross means. All right. Now, these entire positions I've exhausted because market moved against my prediction. Now the robot crosses over to pick how much? $20 each to maintain my original directives of trading $20. How much remains in the balance? If they go and pick $20 each, it will now remain $20. All right. Now, if markets were to move against me again, there will be no enough money for them to cross over to go and get. That is when you now get liquidated. That is when you now get liquidated because you have asked them to always cross over to get more money. Now, market has continually moved against you. There is no more money to go and get from that place. This is something I've experienced over and over and over again when it comes to cryptocurrency trading, futures trading, robots, and all that. So you get an email telling you your account is about to be liquidated. All right. So most times, if you observe this on time, you can quickly send more money to your portfolio so that it will continue to have liquidity to hold the positions of both the ADA, the Cardano, and the XRP. So you get liquidated. Now, let me explain isolated to you. So if you think it makes sense, then you can then go and interact with the robot I'm going to suggest to you shortly. Now, let's talk about isolated. All right, isolated. So capital $100. And as usual, we are trading Cardano USDT pair, and we're trading XRP USDT pair, and each one of them $20 allocated to them, like in the past scenario. Then our balance now becomes $60. Isolated is saying, if market moves against my prediction for each of these positions, close individual positions, end the trade, bye-bye. Do not on any account touch this my $60. So individual trades are isolated. Market move against my Cardano trade, close it, bye-bye. See you next time. It closes against my XRP Ripple trade, close it, bye-bye. See you next time. If I see you near my $60 capital, we will have problems. We will have problems. That way, I don't get liquidated. Now, they both have their advantages and disadvantages. All right. Now, that of crossover will cross over and take more money. Eventually, market can now move in the direction of the trade, and I will now recover all the money that I had temporarily lost. We call that one floating loss because the trade is still available. If you have more money to cushion the trade, eventually it could succeed. It's like a business that is failing. It's like cross is like having chains of businesses. And when each of your businesses are failing, you are dipping money into your savings to save the life of that business. Save the life of that business. But if those businesses continually fail and your reserve, your savings get exhausted, you have been liquidated. But if you have different businesses and you say, the money that I allocate to this business, if it finishes, I'm not touching my savings. Okay? So isolated means you could have trade positions going off, closing at a loss. All right? But you have your backup. While cross, especially for those who have a lot of money, they will have enough liquidity to keep funding that negative trade until it goes into positivity. Those are the differences. All right. So I'm going to give you my suggestion, okay, that can help with our crypto journey at the end of this video. Now, let's talk about trade directions. Okay, let's talk about the direction of trades. Let's analyze it. All right. Now, we have long, can trade long, or the one they call buy, or the one that is on green, trade direction. All right. Then we can trade short, or the one you call sell, and indicated as red. These are market directions for futures trading. And we can also have hedging. And also, I want to talk about trend. I want to talk about trend bots. All right, I'm going to explain each one. Now, long buy green means that you are predicting that the market will go up. All right, that is what it means. You are predicting that the market will go up. Now, for short, you are predicting that the market is going to go down for that particular currency pair. Hedging means you're predicting both directions at the same time. All right? Now, let me explain something to you. Let's assume that we are permanently trading that market will go up. Number one, long buy green. How often does the market go up? Altcoin season, pumping. We know that crypto is volatile and it is always going in an up and down trend. That is what volatility is all about. If it were something that goes in one direction, we wouldn't be talking about volatility and there wouldn't be so much money to be made from crypto. It's because it goes up, it comes down. But when you now look at the overall trend, even inside the going up and coming down, you can tell which trend is going. Like this is a graph. This is going up, coming down, going up, coming down, going up, coming down, going up, coming down. But eventually you can see this is an uptrend. All right. That's how we can have uptrend in spite of volatility. Yeah. So if we are predicting going up all the time, we're trying to look at the frequency. How frequently does the market go up? How frequently does it come down in the overall trend? We have one bull run in every 4 years, typically, where altcoins are always going up. All right, typically. One bull run in 4 years. That means that after that 1 year of bull run, the remaining 3 years before the next bull run, we have a downtrend and also maybe a sideways trend. So what that tells you is that market goes down more often than it goes up. Now, do you know that right now, if you're watching this video when I uploaded it this year, 2025, February, we are supposed to be in the bull run. We are supposed to have been in the bull run since last year. But right now, the market is bleeding. The market is going in what direction? In the short direction, even inside a bull run. So even inside a bull run, there will be market retracement. Market will dump, then eventually go back up. So if you agree with me, then you can understand that the market goes down more often than it goes up. Stick with me in this video. I will suggest to you something that will work at the end of the video. Okay? So some people have said, I don't know, you can fact check me, I'm still learning. Some people have said that 80% of the time, the market is going down short. 80% of the time. We only have pumps 20% of the time. Fact check me. Fact check me, I'm learning. That's why the comment section is there. All right? Now, short sell and red is when market is going down and, the market goes down more often than it goes up. All right? A lot of liquidations have happened recently in the crypto space because a lot of people, because of the bull run, predicted and opened bought positions for long and the market is shorting. So when the market continually moves against you, no matter the settings you use, the settings can help to limit your risk exposure. How much of your money goes into the market just to keep that position for as long as possible. But if it's a cross trade, eventually, if the market continually moves against you, it will be liquidated. You can't help it. All right. Now, let's talk about hedging. Hedging to me is more or less like gambling. You are predicting up and down at the same time for the same currency pair. Now, if it's a robot you're doing, the robot will allocate more money for the current direction of the market. so that you'll be making more profit than losses. But in hedging, you're losing and you're making money at the same time. It's a high risk business. If the capital allocation is not properly done in the current direction of the market, total account blank washout. You lose all your money. Now, I mentioned trend bots because there are artificial intelligence algorithms that can enable a robot to look at the direction of that particular currency pair. Let's say I want to trade ADA USDT. Okay, the bot will, before it takes position, it will look which direction is ADA price going. If it's going up, it opens a long. If it's going down, it opens a short. If it is going down. Okay? But do you know why you cannot totally depend on a trend bot? I'll show you. If the current price of ADA USDT, as at when you want to open your trade, is going up, the robot will open a long. 2 minutes later, the price of ADA USDT is going down. And maybe that downtrend for ADA USDT is something that may last for 3 months, for example. But as at the time you open the trade, the robot follows the direction of the market. One thing we must understand is that a robot is not a human being. A robot is not a human being. What a robot can do with artificial intelligence is technical analysis. Technical analysis. It will look at the trend of the market, maybe over a 2-hour, 1 day, 4 hours trend. Okay, it will analyze, then take a decision. Technical analysis. But the superiority of a human being to a robot is that a robot cannot do fundamental analysis, which is the news. The robot is not going to know what is happening with the US election, whether Trump will win or another person would win. The robot does not listen to the news to see whether what Elon Musk is saying about Dogecoin, whether what he's saying is positive or negative. All right? So, trend bot that follows the direction of the market based on technical analysis. Things can change abruptly, and there is no robot in the world that has opened a position in one particular direction, market moves in the other direction, and it changes. It's not possible unless it is voodoo. So you see challenges? Now, with all these challenges that we have listed, okay, there is a robot, all right, that I am currently testing out. The link is in the description of this video. There's a WhatsApp group also where you can interact with other people who are knowledgeable about what this robot is doing. They did not pay for a promo, so I will not mention their name. Now, what this robot does is trading isolated positions. This is a way to mitigate against liquidation. Like I explained earlier, not crossing over to take more liquidity to keep a trade alive. If that position dies, let it die, leave my capital intact. And also, this robot trades only shorts. Shorts, because majority of the time, the market is going short. All right? It trades only shorts. All right? Now, it is 100% automated. So it does its coin selection, trades shorts for you. So most of the time, you are making money. Now, it is not 100% perfect bot because there will be times when market will pump. But like we established earlier, how often does the market pump? So this is a game of numbers. Now, you can use any other robots to be opening short positions. But of course, you need to do coin selection by yourself if you're going to be trading manually. All right. So with the isolated trade setting in place and selecting basically shorts, it's been giving awesome results. If you look at the crypto charts right now, you'll see the market is in a whole lot of red. All right. That means that this robot is printing money for its users this period because of the way the market is. All right. So if you're interested, sign up via the link. The first link is the link to sign up for the robot. The second link is the link to sign up on BingX, because BingX is the crypto exchange, okay, the crypto exchange that this robot works with. So sign up on BingX via the second link in the description. Then the third link you will see, it's the WhatsApp group where you can enter and get information about this robot. Thank you for watching this video. My name remains Victor Isibo. I'll see you on the other side. Until then, it's bye-bye.